Still on company developments, Hulamin has highlighted that softer global markets and business simplification has resulted in the 15% drop reported in its latest financials. The rolled aluminium firm has also reported local sales at 51%, which is up by 86,000 to 252 tons. Can stock, on the other hand, rose by 3%. As a result, Hulamin has announced that its normalized EBITDA is down by 7%, while cash flow from operations increased to 363 million rand. Capital expenditure, on the other hand, is up 35%. We are joined now by a Hulamin executive. Thank you so much for your time. Interesting results, but you do indicate that it's a tough operating climate currently. How is the company looking at these results with that hindsight of saying this could have been done better with plugging gaps?
Firstly, good afternoon, and thank you for having me. We're actually quite pleased with our results, considering that 2023 was completely two distinct halves. Compared to H1, our sales was actually in H2 12% lower. It took a huge effort with regards to curtailment of costs itself, and being a majority fixed cost business, and in a challenging environment, we're really proud of the collective effort from the 2,500 people as a whole, not just the executive, with regards to being an agile business and matching our production to the demand at that stage. So, which obviously protected our full year profitability, even though our sales volume dropped by 16, turnover by 13. Our EBITDA only dropped by 7%, and that was largely due to the curtailment that we managed to do to match the lower demand as such. And as we see it right now, it's a short-term market experience that we are. But by generating positive free cash flow, it allowed us to reinvest in our business and then focus on when does the market get back to unconstrained. We're ready for the challenge at that point in time.
When exactly are you anticipating the market to get there? Because what needs to be said about the near term is that 2024 is not looking as rosy as we thought in the latter parts of 2023.
Okay. A key part of that is we embarked on a revised simplification strategy with regards to what products we make. And our focus is on the can stream. And we are fortunate in that sector. It's not driven by the GDP, because we all well know there's not much growth there. We've seen a market growth in South Africa in particularly grow between CAGR of, previously we were quoting between 4 and 5% CAGR. Right now it's about 3.5%. So there's still growth. A key part for us is we are really good at doing the can as such. It's our bread and butter product for us. And we're able to right now grow the local market up to 51%, thereby reducing our exposure in the export market. And over and above that, with our capital investment, it's a market-driven capital investment, where we're looking to be able to be well over 80% of the South African market going into the future. We are seeing some green shoots with regards to the export market now, particularly in US with regards to our plate business, but it is still early stages. But what gives us real comfort is how we reacted to the downturn, particularly around H2, to be able to protect our profitability and the cash flow.
One would say a balanced view of what's to be expected in the near-term outlook. At the same time, though, let's talk about how domestic challenges could have maybe created impediments with regards to the day-to-day running of a business in South Africa. From logistics to electricity, it's been tough.
Yes, I agree. But what we as South Africans, we're resilient. And that's what I'm really proud of the 2,500 people there. Is as South Africans, we always make a plan, no matter what challenges there. And Hulamin is no different from any other company. The key part is we've got a stable balance sheet. We've managed to bring the net debt, look at our gearing is below 25%. We've got enough headroom with regards to carrying us going into the future. And that's where we're positioning ourselves. We believe in our simplification strategy that we started 2 years ago. In the last 3 years, we've managed to get what I call sustainable profitability.
Yeah.
This year, for the first time, we converted that to positive net free cash flow, even though it's just 30 million, but we've managed to pay for capital by the cash generation. Now we're setting ourselves with regards to how do we invest to be able to grow the company and create shareholder wealth or value, should we say, down the track.
Well, we wish you all the best, and may it be a better reporting season in the next financials. That's where we leave it with an update from Hulamin with their first half-year reporting and their figures. They're looking a little bit balanced, but there is, of course, a worry about the near-term outlook as well as the current trajectory.